Hey guys, hope you guys had a good day trading today. Today was another tough day. We're in this extreme momentum on the daily and the weekly. And it just makes it really tough as a technical based trader. So to like actually find decent entries and follow the trend. It's one thing to not believe in the trend, as in, so like our extreme momentum intraday, so like the 15-minute chart. Where like Vold is just pumping hard and VIX is falling and SPY is just pumping with it. We might not believe in the trend, but at least there's a technical basis for the trend. But the issue that we've had pretty much the last couple Thursdays and Fridays, especially last Thursday and then kind of end of day Friday, and then definitely today, is that we're now rallying without really any sort of technical basis to support it. So basically what I mean is, so for instance, this is the 15-minute chart on SPY. If you were to watch this chart intraday live and you were to compare it to Vold, which reminder, what is Vold? Vold is the up and down volume of the NYSE. So essentially what that means is it takes the cumulative of how many buys and sells are happening in that moment and then plots the number. And basically in general, the premise is if candles are green, that means more buying is happening on that time frame. If they're red, then less buying is happening, more selling. Generally speaking, SPY does not go up unless it has the support of Volt. So for instance, this morning we had this weakness right here from basically open till about 10:30. Now, if you were to watch Volt at that time, Volt actually looked very strong. So Volt was pushing up despite SPY looking weak. So that's a first oddity. Now, with that being said, what else was weird, is not weird, but was on point, I would say, is the VIX was rising until about 10:30 and was holding pretty much that like 14.7 area. So then what happened from 10:30 until about 11:30, so that'd be this move here to here, the VIX actually fell pretty aggressively, but during that same time period, Vold was pretty much choppy and was kind of falling and then rose slightly and then actually fell lower than it was at 10:30. But what happened? Price went up. So that's odd to see that. So then pretty much throughout the whole day here, obviously you saw SPY just completely take off, especially from 2:30 on. But what happened to the VIX? The VIX completely took off, absolutely on a tear. So the VIX put in, and I put this in my written TA if you're more of a visual person. But for instance, the VIX today closed at 15, which is 8.38% gain on the day. This is the biggest pre-CPI movement on the VIX since December 13th, which was about a 10% day on the VIX. So what's really interesting is most people would look at this and be like, oh, well, the VIX pumped, so that must mean markets really are expecting a miss and the market shouldn't have pumped like this, so it's going to come down tomorrow. But honestly, it's actually the contrary. So this is the second highest since December, but on March, we had a 6.94% move up on the VIX. What happened on CPI day? SPY opened on March 14th for CPI at 1.33% green. Now, what happened on December? SPY opened 2.8% green. But how could that be? Because what's going to happen, if presumably we get a good number, is that the VIX is going to get crushed again. The VIX is going to completely unwind. Why? Because if we get the expected numbers and there's no real sort of fear or anything like that, the market's just going to unhedge. Now, the one caveat I would have here is we're immediately following CPI up with FOMC the next day, and that's definitely going to change things a little bit. So for me, there is a chance the VIX could not unwind, but pretty much what I'm looking for tomorrow with CPI, and I posted this all in the written if you, like I said, rather listen to it or read it yourself. But basically, my prediction right now is somewhere between 3.9 to 4.1% year over year. Month over month should be about 0 to 0.2%. Now, core is where it's going to matter. Core is expected to be about 5.1 to 5.3%, and core month over month is expected to be 0.3 to 0.5. Now, one thing that I'm going to say is that I do not think, unless core comes in below 5.5%, that we will see any green tomorrow. Why? Because yes, year over year CPI is coming down, which again is mind-boggling because it is actually falling faster than it rose, which basically the highest inflation since the 80s, and by some miracle, we're actually taking inflation lower than it rose, which again, to me, if you live in the real world and not the make-believe world of the calculations, it's saying that basically about May 2021 right now is what we should be feeling for inflation. However, if you go to the grocery store, if you go to the gas pumps, if you buy a vehicle, houses, really anything, there is no way we are anywhere close to the levels that we were at in April of 2021. So, core has been pretty much stuck for about the last 4 readings now between 5.5 and 5.6%. If core comes in at 5.5%, and honestly, I think even if core comes in on an upside miss for the prediction, which right now core is expected to come in at 5.5 as consensus. So if we get 5.5 or higher, I'm sorry, I said 5.5, but I meant to say 5.3. If we get core at 5.3 or higher, especially 5.4 to 5.5, I really think that markets are going to negatively react to that. And yes, markets are currently trying to price in a pause for FOMC on Wednesday. But honestly, if core does not come down, I don't see the Fed pausing. I realistically, unless we get like core down to like 5.1, 5.2%, and CPI year over year comes in somewhere around like 3.9 to 4%, I really think Jay Powell is still going to do a 25 basis point hike. I still think that the Fed is going to talk about how inflation has not actually been tamed. You know, we haven't had a rebound in inflation yet. Banks are strong, so there's no reason not to hike. I really think that we are going to see a 25 basis point hike. So we're going to keep it real brief on the actual SPY here. Basically, this was a really bullish day in the fact that we had rejected, and I said we were imbalanced. Remember that. On Friday, I said we were imbalanced. And what we did is we actually turned in this supply from back on August 16th into a demand now, which means a major resistance became support. That is incredibly bullish, especially being that magical 430 number. To me, this means that the upside is definitely there. There's potential we could hit 438 tomorrow with good numbers. But stuff to keep in mind here is that, one, we still have a demand all the way down, or supply left down all the way at 398.2. Potentially, we could leave that. It's one supply, so there is a chance we could leave that. However, there is very little chance doubt in my mind here that at some point we are going to come down and touch 422.1, 428.01, and 429.1 supplies. These levels need to be taken out. There is very little doubt in my mind that we would ever leave 3 supplies on the books like that. I'll talk about it more tomorrow, but one other interesting thing that I did some data crunching on over the weekend is that basically the peak Fed paused rate, or peak Fed's rate, and then the pause. There's been 3 times that this has happened. The 1994 area, 2000s, and then 2006. So what's interesting is basically 1994, they paused and then they kind of hiked again. And in 1994, we rallied 6.8%, dropped 6.3%, and then went to all-time highs. In 2000s, which we are much more close to the Fed funds rate of 2000s based on the intensity that we got to the Fed funds rate and the actual peak of the Fed funds rate. What happened then is after we paused, we dropped 47% and then went to all-time highs. 2006 was really choppy and not quite the same because it was some staggered rates also. But in 2006, we rallied 25%, fell 57%, and then went to an all-time high. So basically, the odds are pretty strong that if we were to pause on Wednesday, that we will see some sort of pretty strong correction to the downside, and then whenever that correction stops, which realistically could be somewhere in the 45 to 55% area, which from here would be 215. That's crazy, but 215, I mean, just to zoom out to see how crazy that is. I mean, that's, oops. 215, gosh, I can't even get it on my map. That's, let's see. So 215 would be right about here. So that's basically the COVID low, is basically where potentially we could go. So that would be a very dramatic crash. So is it possible? Obviously it's possible. Is it going to happen? Who knows? But something to keep in mind. All right, hope you guys had a good day tomorrow. I did not trade anything into CPI. I do think there's going to be a play for CPI into FOMOC though, and I will keep you guys posted on that. All right, I'll see you guys tomorrow.